Mentioned 50 basis points already pretty much been priced in. Tell us what you guys are doing, the traders on the floor. I suppose you've already put in your positions.
That's right. Hi, Eleni. Yeah, it's MPC day, and certainly you've got to be in one way or other. You've got a position. You're going to be expecting something. The market, as you said in your opening statement, is pretty much expecting 50 basis points. Polled economists, only a very few of the polled economists expecting no change. So the market is definitely discounting around 80% chance of a 50 basis point cut at the moment, and therein lies the risk. Obviously, we've got to look at the factors. We're going to have to listen to what Mrs. Marcus says in the accompanying statement, and that's really what we're going to be doing this afternoon.
What do you think she's going to say in the statement? I mean, she could go either way, because South African growth looking relatively strong on a global level, though, and I allude to what had happened with the Beige Book in the US. We are starting to see softer growth, this becoming a concern. We saw the likes of the Bank of Korea keeping rates unchanged, and most were surprised by this move because we expected to see an interest rate hike. So perhaps this signaling that most central banks are starting to get concerned about growth prospects?
That's right. I mean, the things that she's going to be looking at are the growth, the international growth, our local employment levels, and just the inflation forecast going forward. So those are the three factors that in the last MPC she commented on, and said that interest rates would remain where they are unless there's a significant change to those three factors. If we look at inflation, it has surprised to the lower side. They were expecting the low at 4.5%. It's actually coming, as we know, at 3.7%. So that's a tick there for a cut. If we look at the growth, the second quarter was lower than the first quarter, and it is expected to be slow going forward. On the global side of things, as you say, it's also looking like it's not going to be picking up anytime soon. We also had Finance Minister Gordon saying that the deteriorated international growth prospects he hopes will be taken into consideration at the MPC this week. Other than that, the level of the Rand, well, the Rand has obviously been a lot stronger since the last MPC, down at these almost touching on the sort of 7.13 level, as you say. So yeah.
At the end of the day, we've been seeing a lot of flows coming through into the bond market, not so much into the equity market, but this has been propping up the Rand. If a 50 basis point cut has already been priced in, surely the Reserve Bank should be considering an even more aggressive move of 100 basis points. Do you think that is likely? And then if that scenario does play out today, James, do you think that we could see a little bit of currency weakness? Because that, at the end of the day, is what many would like to see.
Certainly a 100 basis point cut would affect the Rand's value at the moment, but I think that's highly unlikely given the relatively conservative approach the MPC takes towards interest rate policy. So I think the Rand's in a little bit of a quandary at the moment, because a 50 basis point cut would initially see a weaker Rand, but then you're going to end up with lower interest rate regime here, making equities look attractive, as well as holding bonds, if we're still cutting rates, look attractive. So you probably actually see the Rand strengthen. On the contrary to that, if there is no move on interest rates, which would be a surprise to the markets, you will find Rand strength. So it's a difficult situation on the currency.
Well, James, just looking at it from a trader perspective, because as we said, South Africa offering great yield, what is it going to take for foreign investors to perhaps also look at other emerging markets and perhaps other countries that offer similar yield to South Africa? Because it's fantastic that we've been seeing such great appetite, but I again stress at the point that it's impacting our manufacturing sector, impacting our export markets. So perhaps trying to deter investors. What do you think it's going to take?
Yeah, it's a hard one to answer, really. I mean, the Reserve Bank and the Ministry have discussed it endlessly, and from past experience, it's a very, very sensitive area to tackle. What is the answer? Well, we saw the comments this week saying that a investment tax is not possible at the moment, so that's out of the window. Further controls on the currency, not a good idea. So yeah, you're pretty much at the mercy of market forces, really.
James, looking at the gold price, we're hitting so close to that all-time high of $1,264.9 an ounce. What is it going to take to push the yellow metal even higher? Because we saw it oscillating very close to that level yesterday, with renewed debt worries coming through from Europe, and those fears being allayed by Poland and Portugal's strong bond auction. Looking at it from a technical perspective, where to from here?
Well, like you say, there are real concerns around the banking sector in Europe. and also around those European countries. You've got lower German exports and concerns over Ireland as well at the moment, the banking system there. So that's behind really the flight to quality with guys buying gold at the moment. We've also seen silver at a 2.5-year high as well. So, you know, the appetite for conserving value is what's driving it there. And once again, that's rand positive. The higher the gold price, the more export receipts. It creates a better environment for the rand as well.
Well, looking at the debt worries that have come through, we've also seen unemployment looking slightly better in the US. Those non-farm payrolls last week, 54,000 jobs lost. Most were expecting 110,000 jobs to be lost. You know, interesting play of things at this point in time, because Australia came out with better than expected unemployment numbers as well. So it's interesting to see that South Africa, again, being that attractive investment destination. How do you think this is going to be viewed by foreign investors?
Yeah, I mean, it's the first really good non-farm payrolls number we'd seen in a while, so I think we need to see a more consistent indication of job creation in the States before we get too excited. The same goes, I guess, for Australia, but yeah, I would look forward further before we make a decision on that.
Well, the unemployment scenario here in South Africa, I mean, we've got unemployment at above 25%. We know that the Reserve Bank has been given the leeway to also look at the unemployment scenario as opposed to just looking at the inflation that is hitting the country at this point. Do you think that a balancing act can occur between the two?
Speaking last week, Governor Marcus said that the answer to creating employment, which is the number one concern in the economy at the moment, is not setting interest rate levels. However, in setting the rate or the level of interest rates, they do take the level of unemployment into consideration. So quite strongly dovish comments from otherwise what hasn't been a really good period of transparency from the Reserve Bank since the last MPC.
Right, if you're a betting man, tell us about the odds today.
Well, the odds at the moment, they're about 1 to 3. So if you're going for a cut, not a great deal to make out of that. So you're probably wanting to be a little bit square at the moment, with the risky trade being positioning for no cut and a cut possibly at the next meeting.